Hello everyone. So good morning. So today we are going to see an important part of this particular module, the third module. So we are nearing to the last part of this third module. In that we'll be learning about organizational structure of stock exchanges in India. So let us see them in detail. The first thing to be discussed here is that the first organized stock exchange in India was started in Bombay in 1875 with the formation of the Native Shares and the Stockbrokers Association. The Bombay Stock Exchange, which is BSE we call, it is the oldest one in the country. With the growth of the joint stock companies, the stock exchanges also made a steady growth, and at present there are 23 recognized stock exchanges with about 6,000 stockbrokers in India. The stock exchanges. Now let us see that there are three important different organization structure. The first one is a traditional structure of stock exchanges. Under traditional structure of stock exchanges, we have the stock exchanges in India are classified basically based on their legal structure into two types. So we can see that there is of different types. The first thing is the three stock exchanges which are functioning as an association of the person, which is known to be the BSE, that is Bombay Stock Exchange, ASE, Association of Stock Exchanges, and Madhya Pradesh Stock Exchange. 20 stock exchanges which have been set up as companies, either limited by guarantees or by shares. The second, after the traditional form, the second organization structure we have is demutualization of stock exchanges. What do you mean by demutualization? It is transforming the legal structure of an exchange from a mutual form to a business corporation form. It means that the broker firms, the broker members of the exchange, they are the owners and the traders of the exchange. And further, they themselves manage the exchanges too. There are two important demutualized stock exchanges in India, and that is in NSE, that is National Stock Exchange, and OTCEI, Over-the-Counter Exchange of India. The process of, now the third type is the corporatization of the stock exchanges. What do you mean by this? It merely means that the process of converting the organizational structure of stock exchanges from a non-corporate structure to a corporate structure. Management. Now, if you see the management part of this particular structure is like this. The recognized stock exchanges are managed boards consisting of the elected members, directors from the stockbroker members, public representatives, and government nominees nominated by SEBI. Stock exchanges, that is, we have Securities and Exchange Board of India. The government has also got the powers to nominate the presidents and the vice presidents of stock exchanges and to approve the appointment of the chief executive and public representatives too. The major stock exchanges are managed by the chief executive director, and the smaller stock exchanges are under the control of the secretary. Now let us see the third important thing, that is corporatization. Under corporatization, we have another thing is membership. So first we discuss about the management. The second we have been discussing about the is the corporation, that is in the membership. So if you want to become a member of a recognized stock exchange, a person must have certain qualifications. As we all know, he should be a citizen of India. He should not be less than 21 years of age. He should not have indulged or have got adjudged bankruptcy or insolvency. He should not have been convicted for any offensive activities like fraudulent practices, malpractices, or dishonesty. He should not have been engaged in any other business except dealing in securities. He should not have been expelled by any other stock exchanges or declared as a defaulter by any other stock exchanges too. Now, let us see in depth about NSE, which is a very important question. Let us first of all know about the brief history or an outline of NSE, National Stock Exchange. National Stock Exchange was set up in Mumbai in November 1992 with a paid-up share capital, equity capital of rupees 25 crores. It was promoted by IDBI, Industrial Development Bank of India, ICICI, Investment Credit and Corporation and Industrial Credit and Investment Corporation of India, Life Insurance Corporation, LIC, and General Insurance Corporation, GIC, and its various subsidiaries. SBI and SBI Capital Market Limited too. The NSE commenced its operations in the wholesale debt market in June 1994, and in equity trading it was started in November 1994. Further, in June 2000, it entered into futures and options, which is a part of derivatives market segment for various other derivative instruments too. So National Stock Exchange of India trades in two basic segments. One is the wholesale debt market segment and the other one is capital market system. So if you consider the wholesale debt market segment, this segment refers to the trading platform for a wide range of fixed income securities like central government securities, bonds issued by public sector undertakings, zero coupon bonds, treasury bills, commercial papers, certificate of deposits, mutual funds, and corporate debentures, etc. Capital market system, if you see the segment of an NSEI, that is, it provides a platform for transparent and fair trading of equity, preference shares, debentures, exchange-rated funds, and retail government securities. We know there is a system, NEAT. What is NEAT? There is an NSE automated trading system. It's a screen-based trading system. The NSE offers NEAT plus packages that will help the members to trade in multiple markets on the exchange with a unified trading interface. Now, let us see about Nifty. Nifty is also a very consecutive term which is associated with NSE. So let us see what is Nifty. The term Nifty is derived from the combination of national and 50, as Nifty consists of 50 actively traded stocks. Nifty is primarily an equity benchmark index, which was introduced in April 21st, 1996 by National Stock Exchange. Nifty is an abbreviation for NSE, that is National Stock Exchange Nifty, National Stock Exchange 50. It is a broad index of the NSE. NSE is a leading national stock exchange in India. On June 12, 2000, NSE commenced trading in derivatives with index futures. The futures contracts are based on the Nifty 50. Later on, the exchange introduced trading in index options on June 4, 2001. Let us see the important objectives of NSE. The NSE was established in order to offer nationwide trading facility for equities, debts, and hybrid securities. Hybrid securities, the benefit is that the risk of the one security will be compensated by the loss of one security will be compensated by the return of the other. The second one objective is trading in NSE occurs simultaneously along with the regional stock exchanges. Thus, it intends to facilitate equal access to investors across the country. NSE ensures fairness, efficiency, and transparency of securities trading. It aims at shorter settlement cycle. The settlement can happen within a short period of time, and book entry settlement system is also enhanced here. Finally, NSE aims at achieving international standards in respect of the securities market. Now let us see the important features of NSE. It's a fully automated screen-based trading system and consists of a wholesale debt market, capital market, and derivatives market too. It provides a service of the trading securities at the same price at any stock exchange in India. There is no trading floor for the National Stock Exchange. Trading is done on the computer-based with the help of the personal computer terminals in the broker's offices. Press Trust of India, PTI, publishes the information about the owner of the scrips and the number of scrips owned by a specific person. The trading members in the capital market are linked to the computer in Mumbai through satellite. The trading members place the orders with the NSE stating the conditions with the price, time, and the size. On the placement of the order, an order confirmation slip is also prepared. The computer system searches for a match and the deal is struck. When a trade is carried out, the trade confirmation slip is printed on the trading member's workstation. The slip furnishes the details of price, quantity, code number of the party, and so on. The identity of the trading members is kept secret. That means it's very much confidential, not disclosed to anyone else. The advantage of automated trading system is that the investor is able to find the best price for his scrips. Thus, the trading member can do the business efficiently and effectively. NSE introduced internet trading with the effect from February 2000. So it is the first stock exchange in India to provide a web-based access to investors to trade effectively on the exchange. Now let us see the second part, that is called BSE, Bombay Stock Exchange. Now BSE or Bombay Stock Exchange, it's also known as the Stock Exchange of Mumbai. It is one of the oldest and the largest stock exchanges in Asia, dating back to 1875, when it was known as the Native Shares and the Stockbrokers Association, and became the first stock exchange in India to be recognized by the government. In 1956, BSE obtained a permanent recognition from the Government of India under the Securities Contract Regulation Act of 1956. This is recognized worldwide, and its index, Sensex Sensitivity Index, is also tracked worldwide. Earlier, it was an association of persons, AOP, but now it is a demutualized and corporatized entity incorporated under the provisions of the Companies Act 1956. Pursuant to the BSE, that is Corporatization and Demutualization Scheme 2005, notified by SEBI. Now, let us see about Sensex. What is Sensex is all about? The Sensex is India's benchmark stock index and represents 30 of the country's largest and most well capitalized stocks listed on the BSE. This index was launched in 1986, and it is operated by S&P, Standard & Poor, an international agency. It is calculated in Indian rupees and US dollars. This index is float adjusted and market capitalization weighted. The Sensex has grown since India opened up its economy in 1991. The top 5 constituents listed in this index are, the top companies are Reliance Industries, HDFC Bank, Infosys, Housing Development Financial Corporation, that is HDFC, and we have is ICICI Bank. Companies are selected by S&P Bombay Stock Exchange Index Committee based on the following criteria. So if you want to see if any companies are listed in the Sensex, on what basis do they select? That is, the conditions are like this. They should be listed in India on BSE. They should be a large to mega capital based company. The stock should be relatively liquid. The company should generate revenue from core activities. Core activities are those activities which helps in the economic development of the country. Like it can be heavy and basic industry, large scale capital intensive industries. Then the stock should be liquid. Then they should keep the sector balanced, that is primary, secondary, or the tertiary sector balanced broadly in line with the Indian equity market. Let us see the features of BSE. It is the largest and the first securities market in India, based in Mumbai, India. The securities that are listed at BSE include stocks, stock options, stock futures, index options, index futures, and weekly options. The Sensex is the benchmark index of the BSE, Bombay Stock Exchange, and that consists of the 30 companies that are financially sound and well established from around 12 different sectors, which helps in measuring the BSE's overall performances. It has helped in the development of the India's capital market and helped in the growth of the India's corporate sector. Let us see the important functions of BSE. That is, basically, if you see the 3 important functions: price determination, the second is economic contribution, and third one is marketability and liquidity. So let us see them in detail. The first is, it is easy to sell and buy securities on the financial market if the security is listed on the BSE, thereby meeting the potential investors' liquidity needs. Second, it is easy to raise funds by issuing the equity and debt securities through BSE, as it is a trusted source from where the securities are traded in the financial market. The third, they provide an open platform for speculation within a legal framework. And the fourth, BSE is a best platform for healthy speculative trading, helping in fulfilling the requirement for liquidity of an investor. Now let us see the important differences between BSE and NSE. So based on the first factor, that is introduction or the meaning. If you try to introduce the concept of BSE, it is the oldest and the largest financial market in India. And it offers the highest speed trading to its customers too. NSE, if you see, it is the biggest stock capital market of India. And this exchange is a front runner in the introduction of the fully automated electronic trading system across the country. If you see, in case of the Bombay Stock Exchange, the online trading is done, and that is known to be BOLT. BOLT is full form is BSC. That is that is a BSC online trading system. BSC online trading system. So that is the BOLT full form. And if you see, in case of NSE, it's called NEAT, NSE Automated Trading System. BSE was founded in 1875. NSE was founded in 1992. The benchmark index for BSE is Sensex, that is sensitivity index. The top 30 stocks are taken here. NSE, if you see Nifty, that is NSE 50, that is top 50 companies are taken here. Then if you see in case of the total listed companies until April 2015, it is 5650 in BSE and it's 1740 in NSE. Then if you see in case of the BSE, the market capitalization is around it is around 1.68 trillion. In case of in NSE, it is 1.5 trillion. Global rank for NSE is 10th, but in case of BSE is 10th and NSE is 11th. The network, if you see, for BSE is over 400 cities. For NSE is over 2000 cities. Why it is more? It's because it's online trading. Now, next is about the differences between Nifty and Sensex. If you see in case of Nifty, Nifty stands for National 50. Sensex stands for Sensitivity Index. Then if you see in case of Nifty, the meaning is Nifty is an indicator indicating the average trend of the top 50 companies actively traded on National Stock Exchange. Sensex, if you see, it is a benchmark index which indicates the average trend of the top 50 companies which are actively traded on the National Stock Exchange. Nifty was introduced on 21st April 1997 and Sensex was introduced on January 1st, 1986. And if you see Nifty, it is officially known as CNP, the CNP Nifty. But in case of, if you see the Sensex, it's called S&P BSE Sensex. Operator of Nifty is NSE Indices and operator of Sensex is Asia Index Private Limited. The total company listed in the exchange in Nifty is more than 1,700. In case of BSE Sensex is more than 5,500. Company in indices, top 50 companies stocks are taken here, but in case of Sensex, the top 30 company stocks are taken here. It includes both Navaratna companies and Maharatna companies. Then if you see in case of the base year of Nifty is 1995 to 1996, in case of BSE Sensex is 1978 to 1979. Base number of Nifty is 1000, base number of Sensex is 100. An index value of Nifty, if you see, the calculation is current market value divided by base market value into 100. But in case of the Sensex, if you see, it is free market value divided by index into 100. Now, let us see about OTCEI. What is OTCEI? Over-the-counter Exchange of India. Now, it is defined as a stock exchange without a proper trading flow. All the stock exchange have the specific place for their trading, their securities through counters. Now, but the OTCA is connected through a computer network and the transactions are taking place through the computer operations. OTCA was incorporated in October 1990. This company was promoted by the consortium of different institutions like UTI, Unit Trust of India, ICICI, IDBI, SBI Capital Markets Limited, IFCI, Industrial Financial Corporation of India, and QIC, and its various subsidiaries, and Can Bank Financial Securities Limited too. It is recognized by the Government of India as a recognized stock exchange under Section 4 of the Securities Contract Regulation Act 1956. The Firwani Committee, as a committee which approved the it has identified the shortcomings of various existing stock exchange system, and they only recommended the establishment of OTCI based on the, to address the three important issues, that is poor liquidity of the scripts and delay in the settlement and the lack of transparency. So based on this, there are important features of OTCI: national reach, computerized trading, ringless trading, exclusive list of companies, authorized dealers. Then we have efficient market pricing, liquidity through market making, investors registration, transfer of securities, transparency of transactions, sponsorship, listing of MSMEs, that is MSMEs, micro, small and medium enterprises, and finally quick delivery and payment system. Now, advantages of OTCI, important question. there is towards three important entities. That is, one is to companies, to investors, and to economy. To companies, if you see, it provides method of raising funds. Then it helps in negotiating the issue price with the sponsors. Then it helps to save the unnecessary issue expenses on raising funds. Then it helps in retaining degree of management stability too. Then it helps in providing greatest accessibility to wide range of captive investors based. Now, next, if you see, in case of investors, OTCI is helping them in terms like easier investment opportunities, provides greater confidence and fidelity of the trading, then provides definite liquidity, then enables the transactions to be very complete and quick, then greater sense of security is also practiced. Towards economy, encouraging the closely held securities to go public, then encouraging the venture capital activities to boost entrepreneurs, upcoming startups, seed entrepreneurs. Then next is the spreading the stock exchange operations geographically and integrate the capital market investments into a forum. Now, participants of OTCI, if you see, there is important participants are, one is companies which are listed their shares on OTCI, members, dealers who operate OTCI counters, registrars who transfer and keep share certificates, investors, settlement banks, SEBI, and finally the government. So these are the important highlights for today. I hope it is very clear. Thank you. Have a nice day.